Hello, this is Steve Malone with CompassFX. Hope you're doing well today and you're getting some good trades. Taking a look at the chart, you can see that the euro dollar has been pretty choppy as of late. A lot of up and down movement. And it never fails that when we get into a situation like this, I get folks writing me wanting to know, how do you trade the synergy method when the market's making these moves up and down? The synergy model is designed that when the price action channel is broken by the average price bars, like in this case at the upside, you look to trade long. However, it keeps coming back into it and then eventually falls. Here we get a break short and then the market moves right back into it. Been very difficult to trade a market when it's like this. It's the same with any trading model for that matter. When the market has inconsistency of direction or a lack of conviction in a certain direction, it's difficult to trade. So what I want to show you today is how to possibly trade the choppy market. Rule number one, though, when you take a look at a marketplace and you can see that in the Traders Dynamic Index you're getting a lot of this up and down and there's nothing really smooth. There's maybe a little bit of a smooth move there, smooth move here, and one right there. But overall, we have a bunch of up and down, up and down, up and down chop. So there's a couple of things you can do. One, don't trade at all. Number two is go down to maybe a smaller time frame chart. Like today in my active trade room, I have some folks who normally trade on higher time frames go down to a 5 minute, even one person went all the way down to a 1 minute just to sit there and scalp a few pips. If that's not your thing, then don't do that. But what I want to share with you today is the fact that in any choppy market condition, whether you're trading the synergy model or some other trading model, it's pretty difficult. You could look at holding into a position long or short depending upon the bigger picture. And that's what I want to get at today, is looking at the bigger picture. What does the bigger picture show? And are there certain levels that the market could move to in the bigger picture? So I'm going to leave this 15-minute chart that we see right here. I'm going to go out to a 4-hour chart, and what we're going to look for specific levels, and then eventually what we're going to do is go back down to the 15-minute and compare the original 15-minute chart with a marked up 15-minute chart, and how I go about marking it up as the market is in kind of a choppy condition. Now, one of the things I've told folks is when you come to any 4-hour chart and you see the average price bars inside the price action channel, in between these two yellow lines, don't trade it. Walk away or go find another currency pair. This is not worth trading. There's no conviction. There's no direction here. And so we're just going to get up and down until some levels are broken. So that's what we're going to be looking for in trading the euro dollar, is a break. Now, some folks today are looking for the euro to retrace up to a high and then sell the rally back down, while others are looking for the euro dollar to hit a support level. Now, it did dip down close to 31.50 today. It also held 32 for a while, and they're looking for the move back up. So there's still some indecision here. I like to step in on something like this and lay on some levels. So I look for the current high point, I look for the current low point, something like this. Then I start looking for some average highs, average lows. Now you can see that there's a low point here and there's a low point here, and I'm just talking about the averages here. I'm just trying to find some similarities in levels here. Also, you can see that back over here we kind of have a range right here, and you see 1, 2, 3. So I look for 3 or 4 highs about in the same level, and then it pushes up a little bit higher here, which looks like we come over here and those match up right there. So let me put another level in this area. Now what I'm basically doing is I'm laying out where I think the market could possibly go to. That seems to work out. 3 points there, a high point there, about a little bit below average there. So those are some levels. And last but not least, you see this little range we had right here? I don't know if you can make it out or not, but we had this little range right in this area right here. You see there's a low point to that range as well, and it sits right about there. Okay? So I'm going to put on these levels from the 4-hour chart and look to see if there's any other points. So I've got these lows, I've got this low, I've got this low, I've got that high, this low, range high more or less, range low, this low, these highs, which are matched up over here. Okay. Now current price here is sitting at around 32.25 at the time of this recording. Let me go back in time. Well, looky there. Price is now sitting at a high point right there, which has been pretty close to these highs right back here. So those are some definite levels to consider. Now what I'm going to do is go down to the 1 hour chart, see if there's any other levels to look at here. We went down, went flat. We already have that low level. That would act, old support becomes new resistance, so we're pretty good there. Let me go down to the 30-minute chart. I'm just stepping down with my time elements. Now at this point, I got a high up here. We've come down to a flat, dipped to a low. We've come up. This looks like a pretty decent little retracement here that we've had. It does appear that there's a possible M pattern right there. High, a midpoint, another high. Possible double top, seen some negative divergence right there possibly. So if I run my fibs, let's see if any of the fib levels match up with the price points that I put. Now notice here, notice that the 0 level, obviously that lines up, but what's interesting is this. Look at this level right here. The 618 falls right in line with the price level that I put on earlier on the 4 hour. So this tells me that's a pretty good resistance level right there. I'm going to make note of that. So what I'm going to do is I'm going to come over here and I'm just going to bold that one up. Make that pretty bold right there. So that level is going to stand out for me. So what I may be looking for is for the market to come up here and bounce off of that back down. So if it breaks, and look here, we have a little bit of confluence right here. We have a 32.42 price point with 32.45. If we break this level up, so this would be breaking a resistance high, I'd be looking for it to go up to the 618 and make a bounce off of that. And on top of that, that would give us a good setup for a 1, 2, 3 down pattern. So possibility of a nice little setup right there. Other than that, I'm looking for any other lines that I've drawn that share confluence. I really don't see them right now. There's no price levels nor fib levels that show confluence. Now one additional thing you could possibly do is to possibly look at pivot levels. If there's any daily or weekly pivots that might have an influence on the trade. So as I step down back to my 15-minute chart, I've gone from a 4-hour chart down to a 15-minute chart. Look what I have here. Notice that right now, based upon the 15-minute chart, I have a symmetrical wedge. On the break of the symmetrical wedge, I have a resistance level and I have a support level. So if this breaks here, I need to see a verified break going below the 32.10. It probably has to come all the way down to 132 because that's the psychological level and a break of that. And then I've got this level, 31.90, and then another level, 31.60 as possible targets. Now break to the upside. Notice that this level here, that was a 618 retrace. So if we break up out of the symmetrical wedge, I have a target here at 32.42, which is basically at the back of the top of the wedge, and then a possible push up to this level here. At that level, right around that 32.65, that's going to be a key level. Now some market participants right now are looking for a move up to the 32.80 level for a possible bounce back down. Look here, the next level up there is 32.82. So there you have it. What we've simply done is we've taken a 15-minute that just looked all choppy. What are we supposed to do? And we let price dictate some levels that we're going to look for a break. We take a look at what's going on right now. We have a sideways wedge or symmetrical triangle type pattern, and we look to break. We break down. We have 1, 2, 3 targets down. We break up. We have 1, 2, 3 targets to the upside with a pretty strong target right here from the larger picture that might indicate a move back down overall. Again, folks, take a look at the overall trend. If you notice back on the 4-hour and the 1-hour and the 30-minute charts, the overall trend was to the downside. So there's a greater chance that the euro dollar will break to the downside. Another key level to be looking for is right around this 31.60. in the last couple of weeks, I've noticed that 30.20 has been a pretty good support level, and 33.20 was a pretty good resistance level. Even though we popped above it, it held out in a range over 3 or 4 days around 33.20. 31.70 is the key midpoint. So I would be looking, as we go into the Asian session and European session, look for the 31.50 to 31.70 level to be tested before a break further down. Also, if 132 holds, we may see a push back up to as high as 32.80, but I suspect that 32.65 will be a challenge for the move higher. Well, folks, it's Dean Malone with Compass FX. Hope some of the information here will help you when trading a choppy market. Look at the bigger picture, draw out the price levels, look for confluence using either Fibonacci levels or pivot levels to help define some significant levels to trade to. Y'all make it a great day, get some good trades. We'll talk to you next time. Bye-bye.